for more on the housing market. I don't know how much more you get after listening to Diane Olick for all that time there. We are now joined by Lawrence Yun, National Association of Realtors, Chief Economist. Lawrence, thanks for joining us.
Good morning.
Okay, so here's the thing I'm wondering about. Rates are coming down. We still need, inside the CPI, the housing component to come down to justify the Fed cutting rates. Is housing like this tinderbox ready to explode when you get down from an 8% mortgage down to, say, I mean, God willing, a 5% mortgage?
Well, certainly the buyers always respond to lower interest rates. The prices, which early in the year had been actually declining somewhat, especially out in the West region, but now prices are beginning to accelerate upwards. Home prices are not part of the consumer price index. It's considered like stock prices, gold prices. It's an asset. It's not part of the consumer price index. What goes into it is the rental component and owner's equivalent rent, hypothetical, right, what the owner would pay in rent. And that has been decelerating because we are essentially at a 50-year high in terms of apartment construction. Okay. So many empty units will be reaching the market, and I think that will begin to calm down the inflation numbers.
Okay, what about the housing market? Is there a level that, or is it just a relative level that people are going to see, hey, it was 8, now it's 6, it's go time?
Well, we have a new reference point. People saw the 8%, right, so they're comparing from that. So 6% looks much more attractive. Now, 6% was not attractive when people were comparing with a 4%. The rate, which I don't think will ever return, at least for the remainder of my lifetime. And so what we just needed for the housing market is really about the supply situation. So long as we have more supply, it will moderate home price growth, and that will be good for America. People's incomes are rising about 4%. We need home prices not to exceed that 4% level.
Lawrence, how many people, I don't know if you have a precise estimate of this, how many Americans are stuck in their home because of this mortgage situation right now?
People are loving their 3%, 4%, which they purchased a few years ago or refinanced into. If one looks at sort of the demographic dynamics over the past 2 years when the inventory levels were low, we have to remember there are over 7 million newborn babies, 7 million Americans who have turned 65. So there are a lot of people who need to trade up or trade down, but they have not done so. But I think as people begin to realize, 6% mortgage is not that bad. It's not 3 or 4%, but I need to make the move. I need that larger house, or I need to trade down. So I think we will begin to see more supply coming onto the market next year.